Given how the US-India talks are at such a crucial stage, New Delhi can't do anything that is really consistent with rocking the boat in terms of de-dollarization, can it?
No, and I think so far the communications and the signalling both from the White House and from New Delhi have been quite positive. I think they're both very interested and engaged in getting a deal over the line. So I think amongst all the countries that are in the negotiations at the moment, they're in the envious spot of being in a good relationship. So I think no, and there's no need necessarily to rock the boat.
If there is a deal, and our colleagues at TV18 have been saying there could be a mini deal in the next 24 to 48 hours, then is that in the price, in the exchange rate?
Not entirely. I think INR, the Indian rupee, has been lagging a little bit behind, and on that tweet headline it kind of softened marginally. So I think we could definitely trade stronger. If you look at some of the fundamentals that India has been achieving, best current account in over 18 months, very solid deficit of the current account, less than 1%, FX reserves back to 700 billion, inflation at 2.2%. What is there not to like? Yet the currency's kind of underperformed. So I think we could see a move nicely to 84 over the next coming months, assuming the whole world is moving in the right direction.
And getting back to this de-dollarization issue, we're well aware of how China has been promoting bilateral trade settlements in yuan. What evidence is there that India is developing its own payment system to perhaps bypass traditional mechanisms like SWIFT and reduce dependency on the dollar?
I think it's very, very limited at the margin. And I think really, I mean, both you and I have been in Asia for a long time. So I think the way to look at it in the broader sweep of things is not necessarily de-dollarization, but normalization. So what do we mean by normalization? The posture of a lot of Asian countries, India included, which had the balance of payments crisis in '91 and so forth, was always to be very defensive about capital inflows, and always to be very, very concerned that they don't want a financial crisis. And then we had the Asian financial crises. I think we're starting to drop that, partly because we've matured. We've got higher levels of FX reserves in the region. We've got good local domestic bond markets, which means that there's less dependency on foreign borrowing, which means that people can actually relax a little bit about capital flows. So we've had the index inclusion for India, for the bond market. And I think the other kind of disappointing thing has been the development of non-deliverable forward markets, offshore markets, that are often doing more of the foreign exchange business in London and other centres around the world. So there's a greater shift towards why aren't we getting more of this FX business onshore? And finally, why aren't we doing more cross-border settlement, which is only natural because intra-regional trade is picking up and becoming more and more substantive. So I see it in that context as being more of a normalization in the posture, rather than being a posture towards being aggressively towards de-dollarization. And I don't think, particularly in the current climate, that would be in the interests and the view of Indian policymakers.
Exactly.